Hey everyone, I wanted to spend a few minutes walking through the Blockcircle custom technical indicators and the Blockcircle custom trading strategies one by one. So let's first start with the Blockcircle waveform band. What this is showing is the overall trend. So in simple terms, you can see the price of the asset itself. Here it's Bitcoin US dollar on the 1 week. And it's looking at the last 2 years and almost 7 months. And what this is showing you is it's overall, you look at the waveform band and you can see whether or not we're in an uptrend, or are we in a downtrend, or are we in a sideways accumulation, range bound market cycle. So what this technical indicator allows you to do is allows you to be able to completely configure it and customize it as you want. So you can change everything you want on the inputs. In simple terms, most of them are exponential moving averages, and then we have 2 simple moving averages. I've received a few questions on what the difference are. So simple moving average is essentially, the formula is straightforward. It's taking the total cumulative price point of each individual time period. So in this particular case, it's 1 week, and then it's dividing it by the number of time periods, right? So it's taking 314 days of cumulative pricing information for Bitcoin and then dividing it by 314, right? So very simple moving average. Every individual day is weighted 1, right? So that's simple moving average. Now, exponential moving average is used to be able to place more weight and significance to more recent data, right? So this is EMA 8. So this is using the last 8 days worth of data, but the more recent few days are carrying a bit more weight, more significance in the calculation itself, because they're being calculated exponentially, right? And that's the specific window function that's being used. And then, so you have EMA 8, you have EMA 13, and so forth. The 3 that I like to track closely are EMA 8, EMA 30, EMA 60, and then the MA Pi 314 that we count as, based upon some quantitative risk management research that we've completed, and others have completed as well extensively, is there seems to be some significance around this number, where if the price of the asset is hovering and oscillating above and beyond this particular price band, then it could signify something of relevance, right? And then you have the simple moving average of 200, which is really helpful on a weekly basis, because that's historically been considered a fairly strong form of support for Bitcoin as a digital asset itself. And then typically we'll go down to like the 300 simple moving average in when the market's going through like a cataclysmic collapse. So that's the main inputs, and then the style allows you to be able to disable any particular band that you don't want, just to be able to reduce the amount of noise and reduce the amount of bands that are being displayed. So that is the waveform band. Next, we have the 2 other indicators. So one is the Blockcircle Heikin-Ashi plus higher time frames. What this allows you to do in simple terms is look at, rather than using traditional candles, you'd be using Heikin-Ashi candles. And Heikin-Ashi candles are calculated a little bit differently in that they're not as reactive to day-to-day or week-to-week shifts. They try to remove as much noise as possible from the picture. So they're improving the signal to noise ratio by not being so reactive to more recent data, right? So what it allows you to do is to be able to look at a smoothened trend on whether or not the market is in the green or in the red. So that's just very helpful for many different purposes. But then to be able to take it one step further, you're able to also look at it across multiple time frames. So if you have, right now we're still on the Bitcoin weekly, and it's denominated in US dollars, right? So you can enable a second time frame. So if you can have enable time frame 1, and you can enable it to be 1 month as an example, and then you can have an enabled time frame 2, and you can set that as 3 months. And what that'll be displayed as is what you see. So the chart Heikin-Ashi is in green and red, of course, the traditional candle colors. And then you have the Heikin-Ashi candle open 1, the Heikin-Ashi candle close 1, candle close 2, candle open 2, candle close 2, and those are for the higher time frame 1 and higher time frame 2. And what this allows you to be able to see in one single unified view is to be able to look at the overall trend of this asset as displayed in Heikin-Ashi across multiple time frames. So hopefully you find that helpful. The next one is the Blockcircle Momentum and higher time frames. So what this is using is it's using multiple, think of it as a composite technical indicator to try to track momentum up and down. And it's using multiple moving averages. It's using the T3, it's using the commodity channel index, and then it tries to really smoothen out the trend as much as possible. And you'll see when you look at the configuration and the parameters of the inputs, you can modify the CCI period. So you can speed it up or slow it down. So whether or not you want to be able to track momentum rapidly by reducing the number of periods that are required for it to calculate the commodity channel index, and from 14 to 13 or 12 or 8, you can do that. You can change the T3 moving average period from 5 to 4 to 3. You can look at the B sequence figure, which is, by default it's 0.618, which historically has worked perfectly fine. And then you have multiple time frames as well. So that's the most important aspect here is you can look at the momentum for any one asset for the chosen time period across multiple time periods, or so if you want to look at, so the red right now is the secondary higher time frame, and it's being calculated on the monthly basis, right? So if I want to change this to daily, the red is still monthly, which is perfectly fine because now I'm looking at multiple time frames and I'm able to see that we are quite extended, right? We're beginning to enter, the momentum is beginning to enter almost oversold territory, right? And historically that there seems to be some historical momentum support around, it ranges between like 120 and it goes all the way down to 200, right? So just looking at the daily is going to be inadequate in being able to determine anything that's particularly valuable. But to look at this across multiple time frames is important and definitely suggested. So now let's go over to the Blockcircle crossover strategy bot. So what this is showing you is this is meant to be a fairly straightforward introductory convergence divergence type of trading bot where it's looking at crossovers between primarily two moving averages. Okay, and by default the way that we've set this up is one. So if you want to have long only or short only, or if you want to have both longs and shorts, you would modify this. And then the start year, so you can start the year from 2020, from January 1st, and at the first hour of the day, the first minute of the day, and so forth. And then your end year, if you want to have it run all the way through to today, then you would just keep everything as 0, right? And then the short length is 1, the long length is 50. So what this is looking for is a crossover between those two. So whenever the short length moves above the long length, that would signify a crossover of potential significance, and then it tries to look to long, right? And then the same, and vice versa, right? So you can modify that however you want, but by default, that's how it's programmed. So that's the main inputs. And then the properties is, you would use an initial capital of 100,000. Your base currency is by default, which is US dollars. Your order size is how much equity do you want to allocate and deploy to this particular strategy. So let's keep it at 100. Pyramiding is just keep it as one order at a time, which it's essentially the number of concurrent and successive orders that are still that would be able to be executed by the trading strategy in the same direction of any one trade. So if you have one short open and then there's another crossover that's potentially valuable, then you would have another another successive order that would be open simultaneously. This pyramiding is not as significant for this crossover strategy bot, but it is particularly valuable with the Blockcircle Momentum Trading Bot, which we'll go through next. Commission is your total transaction processing fees. So think of it as the equivalent of your total transaction cost, which would include exchange fees, which would be a maker fee or taker fee. It would include your price slippage. It would include your order book spread. It would include funding rates and any other commission related associated costs to execute a trade entry or to execute a trade exit. So if you're opening a long or opening a short, you would incur some form of commission, and it varies by asset pair. And you can also specify specific slippage if you want. You can have margin for long positions where you're keeping some collateral aside, and then you can modify the recalculation parameters. And then, of course, you can modify the short-term length, the long-term length, whether or not you want to display the quantity. So that's the Blockcircle crossover strategy bot. And what this is allowing you to see is anytime that you have a crossover, so whenever you're seeing the yellow is crossing over above the blue, so whenever the 1 day moving average crosses over the 50-day moving average, it issues a long trade signal. And you can see all of the list of trades here. If you go all the way to the bottom, you can see that the first trade was on January 2nd, 2020. And then the second trade was a long that was open on January 5th at 7,300. And then it closed at 8,700, right? So after almost holding it for almost 2 months, and it made 19% while the first trade lost 5.9%, right? So this particular strategy I do not consider this one, particularly profitable or attractive from an adjusted risk attractive standpoint, and because you can see that the profit is 630%, which is fine, but the percent profitable or the win accuracy is not that high. The drawdown is no good. And then, you definitely do not want to be exposed to a 53% downside like drawdown. And you can be able to also assess the performance summary here. So what this allows you to do is to be able to say, okay, we made 630% in 3 years, but does that outperform buy and hold? It does by a factor of 2, which is excellent. It also allows you to see the Sharpe ratio, which is no good because it's below 1, the Sortino ratio, the profit factor. So the difference between these ratios are whether or not the element of volatility and risk are included as part of their base formula. And really everything is here that you would possibly imagine you would need to have. And then your properties will be able to give you an overview of the actual strategy itself. Hey, so the next trading bot that I want to walk everyone through is the Blockcircle Momentum Trading Bot. So I would consider this to be our flagship. And we've already found a very profitable trading strategy that is worth looking at, that I will walk you through step by step. So what this strategy is doing is it's trying to calculate and identify momentum of any one particular asset based upon the configurations that you've set. So what this means is that it's using multiple conditions that have to pass before a trade is issued. So what that means is that now that you have it added, it's going to tell you when you should buy, so when you should go long and when you should go short. And there's really 3 main components that go through into the momentum trading bot. There is the backtesting time period, which applies to every trading strategy. In other words, how far back do you want to backtest this particular iteration of this trading configuration that you've set, right? So right now we're running it from January of 2023 until today. The second big component of the momentum trading bot is your entry conditions. And that includes, 100 plus different type of individual conditions that are completely configurable. And each of these configuration parameters can have millions of different values. So imagine we're literally having tens of millions of permutations that you can backtest. And so one of the big major entry conditions, and we'll go through these, is a momentum-based indicator. Then the third big component of the trading strategy is the exit conditions. So let's assume that you are in a trade and you have an open long. How do you actually exit that trade, right? And this allows you to do that. So you have trade issuance and then you have trade management. Exit conditions is part of trade management. So you can have a stop loss that's predefined. You can have a target profit. You can also have trailing stop loss. And what this allows you to be able to do is you essentially have a moving target. So as long as you initially hit a target profit of 2%, the trailing stop loss gets triggered. Once it's triggered and activated, it essentially keeps shifting the stop loss up and up dynamically to be able to continue to follow that particular trade as much as possible and extract out as much profit from that trade, right? And it tries to give it and you could configure this, of course, but it tries to give it enough breathing room for that trade to properly move in the direction that you have hopefully predicted correctly. So that's another form of exit condition. Another exit condition is indicator-based or metric-based invalidation. So what this T3CCI invalidation is showing you, and I wrote this as part of the logic and the tooltip, is if you are in a long, and that means that the momentum was determined to be going up, and that you should be trying to ride that momentum as much as possible. If you enable this, what this is showing you is that if it's been determined that the momentum has now flipped down while you have an open long, and it's been decisively closed on a particular candle, which is 12 hours in this case for Solana USDT, then it would close the trade, right? Because at that point, potentially the momentum has flipped to the downside and the trade has been invalidated. So that's one form of invalidation. Another form of invalidation based on momentum as well is the Heikin-Ashi. So Heikin-Ashi is another form of candle displaying and candle calculating, which tries to smoothen out as much noise as possible by calculating the entirety of the candle rather than just looking at the open and close. And the formula is a little different, but it takes into consideration the OHLC, so the open, high, low, and close, and then divides that by 4. So that's just one example. But these Heikin-Ashi invalidation is very important, and you would want to keep testing that. So you want to enable it, and then when you enable it, you see whether or not it helps. In this particular instance, it doesn't seem to help. And then those are the three main components. Then you also have your final properties, and this allows you to say, do you want to enable a long? Do you want to enable shorts? Do you only want to do shorts? Do you want to do both? And then rather than executing market orders, you can execute limit orders. So that is basically, and then if you execute limit orders, you can also have the ability to be precise around the adjustment upon entry. So to try to increase fill rate, right? Or increase the probability of it actually being filled. Because sometimes the price is quite different. So let's go through each component here. So the main components are backtest time period we reviewed. The second is the entry momentum indicator. And what this is showing you is if you have this enabled, it's going to take into consideration the momentum as part of one condition among other ones to confirm that it is actually moving in the right trend. And if it is, in fact, then you use that as an entry condition. So as long as that condition is met, then it moves on to the second condition, which is looking at a higher time frame. So if you notice that momentum is trending up on the 12-hour and you have a higher time frame confirmation on a 1 day, it also verifies that the second condition is met, which is momentum is also moving up in the same direction on the 1 day. Then let's see if there's any other. Those are your main momentum-based conditions. Then you can also have Heikin-Ashi conditions where you can enable Heikin-Ashi. You can enable Heikin-Ashi candle closes. You can use Heikin-Ashi higher highs and lower highs, or higher lows and lower lows, and try to catch those reversals as effectively as you possibly can. And the same concept around singular time frame versus multiple time frame validation is very helpful from a Heikin-Ashi standpoint. And there's a lot more. So you could also do exponential moving averages. So if you want to be able to see if the price is within a certain bound, right, within an upper bound and lower bound range of within 1.5% of the EMA, then you can use that as a potential entry condition as well. Another condition is a slow stochastic indicator, right? So if you're noticing that the slow stochastic is rising or declining by a predefined like threshold percent, then you can have that as another entry conditions. And that's what we have with the momentum trading bot. Is those are the entry conditions. The next thing is the exit conditions. We reviewed all of that before, and you're good. So let's look at the performance of this particular trading strategy. So this trading strategy is, I think, tremendously attractive because of multiple reasons. So one, your net profit over the course of 6 months is 400%. And this is using 1x leverage, and we'll go through that. It's only executing 20 trades, so that's perfect. It's also on Solana USDT, which is a top 5 coin in terms of liquidity, availability, accessibility, and I think long-term demand could be significant for a layer 1 blockchain. So, those are the types of coins those large caps are the types of coins and assets that you want to be able to trade, confidently with large volume, if that's what you're looking for. Another very important aspect is the percent of profitability, which means that out of 20 trades, how many actually made greater than 0 returns? And that's 85%. This is sensational. This is exactly what you want, because you want to be able to have a high degree of confidence that your intended trading strategy is going to execute a trade profitably at the opportune time, right? And so that's important. Profit factor is essentially, how much you are making and generating in profits divided by how much you're actually generating in losses, excluding fees and processing costs and so forth. And then your drawdown. So the drawdown is incredible here because it's at one point it was actually single digit drawdown, but in this case, the max drawdown of like 14% is good. What that's showing you is your total downside exposure. So in the absolute worst event, right, during a significant market pullback of this year, the total drawdown exposed as an unrealized loss was 14%, right? And you can see that displayed in the purple bar here, right? So you can see that on this axis here, right? On this y-axis, that is the actual displayed max drawdown, right? And I think that's very good. So now let's look at the actual performance relative to buy and hold, because you always want to compare the profit of a particular trading configuration relative or compared to a benchmark. And the benchmark in this case is a buy and hold. So had you bought Solana in January of this year and you held it until July 20th, which is today, how would you have performed? How would that trade have fared, right? And had you done that, you would have still made 124%, which is excellent. So starting with a balance of 10,000, you would be, you would have done really well, right? And let's say, but what we've been able to actually generate is that's 3 times higher than a simple buy and hold. The Sharpe ratio is attractive. You have a fairly good performance across both longs and shorts. You seem to be losing quite a bit more during shorts, which is fine. It's fine because you have the percent profitability so high, like the win trade accuracy is so high. That's what you want. And we're actually right now, we've opened a short on July 18th a few days ago, and it's 0.6% in profit, right? And it's actually run up 2%. So it almost triggered the trailing stop loss of 2% that we set. Now, if I go to the properties, I was starting with initial capital of 10,000. Order size, it's using 1x leverage and it's using all of your equity. If you want to display this at 2x leverage, you would put 200% of your equity. And pyramiding is, and I explained this in the other instructional video, but it's the number of simultaneous orders that can be opened in succession in the same direction as an existing open order, right? So if you can have 2 or 3 multiple orders in parallel running in the same direction. Commission is your total transaction cost upon the entry of a trade and also the exit of a trade. So think of it as inclusive of order book spread, price slippage, funding rates, funding fee commissions, exchange fees, like if you're a taker or maker fees. So all of that is absorbed and rolled up into a commission, and this varies significantly by asset. And you can specify just slippage on its own if you want. I like to keep 20% margin, and you can be even more conservative or aggressive depending on your risk appetite and your investment horizon and what your goals are. That's really it. And then your style allows you to modify everything completely. What you'll see here in these blue dots is those are the trailing stops that are being moved, right? So this is a stop. This is when the stop loss was hit, and then this is your stop loss, and then you can modify it and completely change it however you want. So you can remove the quantity, you can remove the labels if you want. And what this typically does is that if I just look at this as an example, what typically will happen is it'll wait for candle closes before it enters or exits a trade. And if you see a downwards triangle, it means that very likely the next successive candle afterwards is going to open a trade, right? It's going to open a short. And so if you look at this example with a long, you have an upwards green triangle. So then the next successive candle itself, it opens a long. And then in pink purple, you can see a stop loss being triggered. Again, this has worked really well for the beginning of this, all the way the last 6 months. And I could argue also that this particular strategy could be considered even more valuable than a trading strategy that you've backtested in the last 5 years, because the behavior of the assets 5 years ago versus 3 years ago versus 2 years ago versus the last 6 months has changed considerably. The fundamental landscape of investing in digital assets has changed completely. The underlying population of investors, their behavior has changed. Their dispensable cash and investment capital and collateral that are being used towards trades has changed completely. So that inherently means that it's going to be extremely difficult, near impossible, to find a trading strategy that works across multiple assets and across multiple time periods. I mean, that is, of course, the North Star, and that is what you're aiming and aspiring to accomplish. But ultimately, all you need is one. You just need one proven strategy that seems to work quite successfully with a high winning trade accuracy, and then that also has, like I was going through this in more detail. I was showing you the 85% test, right? So you have the winning trade accuracy of 85%. That's what you're looking for. You're looking for the max drawdown of single digits to 20% or below, which is good, because even if you're using 2x leverage and you have your max drawdown as 10%, then you're perfectly fine and you're in the clear, right? So your maximum loss in that case with 2x leverage would be 2 times the actual drawdown that you calculate. So when you change that in the properties to 200%, then the max drawdown is already recalculated inclusive of the actual leverage ratio that you're using. So that's the Momentum Trading Bot. This is something we are particularly proud of that we've accomplished, that we've rolled out to members. We've had many members who've used it successfully, who we've helped launch and automate it as an algorithmic trading bot, where we've collaborated with different middleware trade execution engines like Mizarbot, 3Commas Bot, Cornix. Some people have used different robotics automation processing systems like Pipedream and some of the others, where they have launched their own. Some have launched their own using Python, so I'll show you an example. So if you can have an alert that is configured and that could be sent to whoever you want. So I've been experimenting with it where it's using a webhook via Discord, and it's sending a post request via the API to go and generate a trade signal every single time to go long or to go short, and it's sending it directly to a Discord, just purely for experimental and research purposes. You can also this language, this syntax is extremely sensitive, and it's specific to each middleware trade execution engine. So 3 uses different message content than Cornix, and they all use their own proprietary language in the content. And in the Discord, I include that, right? So I include 6 different options in terms of how to deploy and launch this particular strategy. So that is it. And I hope you find it helpful, and I hope I'm available if you ever have any questions on how to actually run it and how to tweak it, configure it, modify it. I'm more than happy to help. Thank you so much.